Yeah, I think they are keeping everything spinning. Yeah, absolutely. I mean, Jerome Powell, his comments in December were quite significant when he, at the committee meeting, said that he thought inflation needed to be significant and persistently above target before they were even going to sniff a thought of a rate hike. And that was huge. I think that was liquidity, central bank largesse. That was just a green light to load up. And quite a lot of hedge funds switched their positions on the back of that from short to long. And we had that whoosh up in December into Jan. So they're not the only part of the rally in the equity market, but they are a key part, absolutely.
What are the other parts?
Well, the other part is the fact that we've got a global economy re-accelerating. So coronavirus is a bit of a hiccup, sure, but the trend is absolutely up. And people get confused because they expect China to do a huge stimulus like they did in 2016. And this is not China's turn to drive the global economy. There's really three engines: America, Europe, and China. And China doesn't always participate in the sort of mini-cycle upswings. We had one after the Euro crisis, mini-cycle upswing globally. We had one after 15-16, and now we're in our third one since then. And of course, after the Euro crisis, it wasn't about China. They were trying to deleverage. They were muddling along. You may remember, they were absent. 16, they were there. Now they're absent. It's about the Western consumer. The American consumer, and indeed the European consumer, more than people realize, are driving this global recovery. So I'd say I like to think of these mini cycles as sort of roughly 3 years, around about 2. I mean, don't get too precise on it, but we're in year 2. So last year was year 1. The classic year 1 in the mini cycle is the central banks get going, they turn around, they cut, earnings don't really grow, the economy's still slow, but the central banks are providing liquidity. Year 2 is really the case for the global growth story upswing becomes more convincing. So what's the evidence? Tons of it. So US housing cycle. Look at housing starts and housing permits, just taking off. Been flat for 3 years, last few months taking off. And the rule of thumb is if you get housing right, you get the US consumer right. And you broadly get the US economy right. So that's good. We've had an inventory cycle in the States, which is destocking's largely run out. Now we're going to go to restocking. And the labour market in the US remains robust. So it's all pretty good over in the States, and bits and pieces of that in Europe, although it's not as obvious. Yeah, for sure. Because it always makes me laugh, because people love the idea that if you had a big year, you're going to have a bad year, or an average year. But actually, there's been 5 years when the S&P has done 30% or more in the last sort of 40 odd, and almost always afterwards, it's a plus 15, plus 20. So just because the S&P's gone up 30 doesn't mean it doesn't go up 15 the next year. In fact, we're already up about 5 or so, and we're not far into the year.